Welcome to the Making Money in Multifamily show, where we discuss everything to do with multifamily real estate investing. We believe it's the best way to gain financial freedom and build lasting wealth. This is where you'll find the best information and practices to help you succeed in your real estate business, whether you're already experienced or just starting out. Here's your host, Dave Morja.
Hello, listener, and welcome to the show. I am your host, Dave Morja, and with me today is Nick Earls and Eric DiNicola. Nick and Eric, welcome to the show.
Hey, Dave.
Thanks,
Thanks for
Dave.
having us on.
Yeah, I just really appreciate you guys coming on, and just for the listener, wanted to give you your backgrounds to them. So Nick and Eric have founded Winter Spring Capital. They both bring tons of experience, a couple decades combined in the real estate realm. All pretty much all facets of it. So Nick is the managing principal, and he's done asset management, new construction, property management. He pretty much runs kind of the more we spoke Nick earlier before we recorded, but more the entrepreneurial side, if you could call it that, of the business. And then on the flip side, Eric is more of kind of the business management, more financial background, understands kind of the more portfolio management and a little bit more of I guess more of the numbers side of things. So would you guys just mind kind of digging into your backgrounds? I know you have a lot of development experience and kind of a lot of creative methods to get real estate done today. And I know you're up in Boston, Massachusetts area on a couple of these deals. So yeah, if you just wouldn't mind digging in a little bit.
Yeah, absolutely. Eric and I have actually been friends since we were kids, almost 20 years now. And just growing up in high school, we always kind of did these team-oriented activities, powerlifting, football, played, competitive video games, stuff like that. So got, good teamwork between the two of us from a young age. And we also kind of had that, I don't really want to work for someone else kind of rebel streak, behind us from a young age. Didn't know how we'd implement that, but just kind of had this idea out there, went our separate ways for a few years, went to different colleges, and I got my real estate license out of college, was in kind of a smaller commercial residential apartment buildings, Massachusetts and Connecticut. And I kind of saw the more investor side of real estate. I actually come from a construction background. My parents owned a contracting company growing up, doing kind of public work. So I knew construction, but I didn't like that. I'm not good with my hands. And, my father was a carpenter, my brother's a carpenter. So I knew I wouldn't do that. But I saw the financial side of it, and I really understood that, this is a way that you could achieve financial freedom and kind of security that we were looking for, control our own lives, and eventually someday maybe not even have to work that much, retire. So I told Eric, and we had this plan. We're going to save up money. We're going to buy a rental property. And we're doing that for a few years. And in the process, I saw an opportunity in condominium development in some of these up and coming neighborhoods of Boston. Boston is one of the number one life sciences cities in the country. So you got biotech and medical, you got Moderna, one of the vaccine producers, and Cambridge right outside of Boston. So you've got a lot of these high income workers flooding into the city. And a lot of them are renters, but a lot of them also want to own condos. And so there's a good opportunity there. There's a huge supply shortage due to some red tape and barriers we could get into. But we decided instead of buying a rental property, we would buy a 2-family where you could add a third unit. It was in a 3-family zone. And we had saved up money for maybe like 4 or 5 years at that point, and that's how we got into it. We've been doing condo projects ever since. Nowadays, we're doing some other stuff as well. We're doing affordable housing project, and we're doing a office to apartment conversion project as we're kind of building up our own rental portfolio. But we always do these condo jobs, and it's just kind of a niche that's served us well over the years.
Yeah, and I guess you mentioned a lot of the bases, these condos, right? So it seems like one of your strengths, and we can dig in further, but would be kind of finding these development niches where there might be some opportunity others aren't seeing. Not literally opportunity zones necessarily, but opportunity nonetheless, where maybe you mentioned that duplex that could turn into a try. It's something that has value that you might not be able to tell if you're only looking at the high level. Um, could we just kind of maybe pick at that as to something more recent, or even just specifically one of these condo deals or something where you were able to value something and determine it was a good buy that maybe someone else wasn't seeing?
Yeah, that's a really good point, Dave. I think I know we're very opportunistic guys. Our company that, we formed and got to this point is a very opportunistic company, and we're not, married just to that one niche and say, okay, look, this is what we're doing. That's it. This is all we can ever do. We are really opportunistic. So we saw, the first one that Nick was talking about, the two family, we call it two family. Everyone always says duplex, different parts of the country.
Same thing.
But it's duplex. We turned into 3 individual units by adding a bit to them and then sold them individually. And so that was something where within the zoning code, we didn't need any special permission, which most of our projects we need special permission, which is a whole big process. Um, but Nick found this situation where he said there can be a lot of value added here without sort of going through all these additional hoops that we now typically go through. There's not many of those projects left in Boston where there's a lot of value. At least that we're seeing, and we're pretty much seeing everything at this point. In our backyard is there's not a lot of those. So what you have to do to really create value is be creative, be opportunistic, kind of morph with the market as it changes. And so, that's where we've come now to. We're doing the condo development still. We'll see a 2-family, and we say, okay, look, I think based on the size of that lot, we could knock this thing down and build a 7-unit building. And, we'll have conceptual plans. We'll do it. It'll take a long time. We'll go through the process, and then we'll sell 7 individual units to 7 new homeowners. And it's great, but we're really seeing a new opportunity over the last year or so is kind of the thing it's been touched on a little bit so far here today is the office conversion. So we found as you get a little outside Boston, and Nick alluded to this, the red tape in Boston it's becoming, thicker and thicker, whatever term you want to use. It's becoming more and more difficult as a developer to do anything, especially smaller firms, small and medium sort of firms, like us. Some of the big guys, it's no matter what, they're going to get through. They can push their weight around. They have a lot of money behind them. All the other firms out there, though, they're fought from every angle. It's as if at this point, Boston doesn't even want you to develop in their city. They don't want you to upgrade a parcel of land to its highest and best use, that we see. And we think, hey, we can do this, we can do that. They put up many barriers. So we're starting to go outside Boston a bit and seeing that there's some opportunity in maybe like conversions, and not in sort of the original sense that we found, a 2-family and made it into a 3. We're seeing, okay, there's old buildings that are really underutilized. There's a high demand for rent in some of these satellite cities for renters to find spaces to rent, I should say. Maybe there's kind of a connection there that we can make. Can we turn these underutilized spaces? And when I say underutilized, I mean pretty much vacant, not even like, one big tenant is not really using it properly. It's really, the building we have now under agreement, for example, it's about 50% occupied of offices. So this is in a satellite city outside Boston where we said, okay, look, there's some retail on the first floor. This is an area where the city wants you to help them redevelop it. They want you to bring money in. They want you to bring renters in. They want people to live there, to move there. The crime rate has really gone down over the past 2 decades in this city. So there's a few of these kind of, like I'm saying, satellite cities around Boston where this is still possible and rents are very affordable for a normal family or normal person, normal renter. So we've come in and we saw an opportunity to convert this about 50,000 square foot office building and retail on the first floor into 31 apartment units with a bit of office space on all the upper floors there. And then the first floor will remain for retail spaces. So it's kind of like a covered land play where we're going to still collect rent from the retail tenants who have leases in place while we work on the upper floors. And unlike Boston, the process to getting special permits, something like this would be so difficult in Boston. You're not only are you adding, all these changes, you're actually changing the use from, commercial to residential. So but they welcome that here. They want you to do that. They're willing to work with you. They're willing to give you the special permit if you can follow certain guidelines. So that's something where we see a really big opportunity to come in and create homes for renters. And from an investment standpoint, that we're going to hold on to this asset. So it's something where we can now continue to build our company's balance sheet once we're done with this thing, rather than, selling for even, great profit. Sometimes the condo projects, once we sell them, that's it. We sell them to homeowners and we're out of it. So this kind of is a twofold opportunistic approach where we see the market is allowing us to do this. And then we see, okay, this also benefits our company. And on the third prong, I guess you could say, you're bringing renters into the city who actually, want them.
Yeah, so all right, I got a few things coming out of that. First one is just to, I guess, highlight. It seems like you guys are very agile in the fact that you can keep creative on these deals, but remain flexible on how they get done and still be in your market, but also where they get done. You're talking about hopping to different smaller submarkets here outside of Boston. Um, and then the second thing I noticed was really, and you really briefly kind of highlighted, Eric, but just the city buy-in, the town buy-in on that. It sounds like if you guys come in and you guys are a strong team, someone comes in like a strong team like yourselves and has a great idea like that where they're trying to, I mean, there's like cities like this all over the US, right? Especially I come from more of the Rust Belt area in upstate New York, just towards the end of the Rust Belt. If you were to kind of draw it out, towns are looking to get redeveloped. They're just itching for a good excuse to have businesses come back, small business. So what does that look like for you guys day one to identify that opportunity and then go to whether it's the city or the owner of the building that needs repurposing? How does that look like for you guys to come in super strong and ready to rock to actually make kind of honestly something out of nothing?
Yeah, so I mean, I could even go through the whole process of when we identified this deal on the open market. We had never done a project in the city before, but we have years of experience kind of with an even more difficult market where you have to get permission literally from the neighbors, and there's so many neighborhood groups and there's a lot of political stuff you got to do, so we're used to that. um, but we knew this is a new market, so how is this going to work? So what we did is, before we even put an offer on the property, we were calling the city government. We were talking to the city planner, and we were talking, it's also a historical building. It's an old used to be the heart of the industrial revolution here in the United States. Is a city called Lowell. So there's a lot of these really nice historical buildings from the 1800s, and you can actually make additional profit. You can get tax credits when you renovate them. So that's another aspect to this project. But we identified this project, and we said, okay, is it feasible? What's the government think? And so we called them, and we learned that even though by the zoning code you're not able to do residential on this particular street, that's an outdated zoning code, and there's just not really enough political will to completely revise it. But they have this special permitting system, and they're actually encouraging you to go in there. So that was a good kind of green signal for us to move forward, knowing that the city was on board before we even put an offer, before we even toured the building, actually, because that's step one to us, because we're very used to having to scale those barriers. And then from there, it's getting a zoning attorney. So we spoke with a couple brokers, commercial brokers in the area, and they all kind of recommended to us the same guy, the same zoning attorney, which is a good sign. We always go for kind of word of mouth recommendation. You can, you're not going to get it from Google or forums. You got to talk to people, or, boots on the ground. When we started off, we wanted Google stuff, and that just doesn't work. but you get the recommendation. We spoke with him, and he's right in there speaking with the city from day one. We have an architect we've been working with for years. We had him come in there, measure the building. We had our contractor walk through, give us a price. So we've kind of already assembled the whole team before we've closed, and we already have a preliminary plan set, and we're going to be submitting for that special permit at the end of the month here. I forget the exact date, but the end of December.
So, yeah, the strong team, I guess, obviously, especially when you get to the local level here, there's probably a good level of buy-in when you're already using kind of the local players. Was that part of the decision too, I guess, or was it really just to find the most qualified? Because, like you say, it's a little bit political when you're talking about something like this, right? So what was kind of the thought process through that vetting too?
Well, I would say, our initial goal wasn't to necessarily get someone enrolled, but once we heard, um, oh yeah, we've worked with this guy, the state, again, tax credits. This firm has done state tax credits. This firm has done federal tax credits. Oh, we've all done, projects in the city that made us feel a lot better, and we knew we were making the right decision with these people.
Got it. So it's kind of just a good match on both sides of the coin there. Um, and then really getting into, you mentioned that this deal is different technically, but not necessarily using a different skill set. Could we just dive in there a little bit? I know this is kind of basically a repurposing of an old historic building. How are you guys using, your construction background and your backgrounds in general to structure this deal and do it more of, I guess the more real estate side of things to get this deal developed and through the wickets?
Yeah, so I mean, for us, it's kind of a confidence thing because this it's a value add deal, which is what everyone's going after. Because if you can add value, you can generate the most return for yourself and your investors. For us, it might intimidate a normal person to say, well, we got to completely gut renovate this building. And it's a historical building. We got to get a historical process. We got to get a special permit. But since we've been building these condos and we get special permission on most of our projects, um, we feel like, it's a slam dunk, and it has been so far easier in the process we've done so far than projects we've already dealt with. So it goes back to the classic thing of adding value. We know how to build a building from the ground up. um, we've done historical renovations before, actually, where we turned them into condominiums. So having that experience behind us kind of makes this project not feel like anything new, even though we're in a new city, we're getting tax credits and some sort of things that we haven't done before, but it's all the same sort of skills we've already built up.
And then this deal sounds like more of a legacy project for you guys. You mentioned the condos is more of the flipping if you were to akin it to anything, and this is more of a buy and hold type of situation, or at least a long-term hold. Um, are you able to structure this so it's only a deal between you guys? Are you bringing in investor capital as passive money? How is this structured kind of on the equity and debt, I guess? I mean, how are you guys getting this deal done?
We are we're currently working on structuring it. We've talked to a few guys about the debt so far. Since you're dealing with, tax credits as part of it, it's almost like that's another capital source that gets kind of worked into the overall stack, which is new to us. We spent a long time sort of studying and talking to the, consultants we're working with and the advisors and the attorney. It also helps that our general contractor has done his own tax credit project in another city in Massachusetts. So that kind of helps. So we sort of pieced it all together and we figured out, okay, you could go into this like a normal project where you have your entire capital stack up front. You're buying the land and you're getting the construction loan and you're going to start. In our case, since there's sort of a longer buildup, we're working on applying for the tax credits and that sort of aspect. It makes it a bit different. So in our case, we're probably going to end up closing on just the building first. We'll own that. We'll be taking in income from those existing tenants, which is nice as we continue to kind of go through the process. And so that'll be structured, most likely kind of a typical like 75 LTV, put down 25%. And we'll be raising capital for that. And the way we kind of see this investment working is we're going to give, our investors, people who are interested in a play like this, we're going to give them a preferred rate of return. So until we're going to go through the process. It'll take a couple of years. At the end, we'll either sell or refinance. Either way, they get that return at that point, whether from the sale or from the cash out on the refi, before we see anything. And so that's kind of a way that we figured, okay, we're going to bring in outside capital. It's going to be a couple of years. There's not going to be really, incremental payments going out, not going to really be distributions till the end, just given the nature of this, which, we're used to with condos. There's no income during construction. So, a lot of the investors we work with are used to that, and they're willing to trade that off for the good returns. So that's how we see this project going. It's sort of dependent on the market at that time, but we'll disclose all that up front and say, look, we might sell this thing. We might refi it. Either way, you're going to get that preferred rate of return, before anything, happens for us.
And I think you kind of nailed it there. So the deals I typically look at more conventional, where there's cash flow or at least some level of cash flow day one, not a development play or anything that you guys are looking at where there's basically delayed gratification on your return on money. Is that just a scenario of that's your guys' bread and butter, so your investors know what to expect when they go into investing with you? Or was that a kind of had to train them up because you used to do it a different way? Sometimes if you go in with different expectations on a specific deal, it could get tricky to teach investors that have been investing a certain way to, kind of expect a different profile of return on a deal. So, just maybe speak on that for a moment.
Yeah, I mean, from the beginning, our investors have been built up around condominium development, so they're used to this kind of what, as Eric referenced it, we do this kind of lump sum preferred return, which is very easy to understand. It's a little different from what you typically see in the industry, but I think people like it, especially people who are new to real estate investing, because it's very simple. And they're used to that, the people who work with us. And a lot of our investors are just repeat investors. And at the same time, you're making a higher return typically with the successful development deals. So that's that you might have a person who is investing in something where they're seeing cash flow on day one, and then they're putting some money into a project like ours at the same time. They have a lump amount that they can invest every year. They put some into development projects where you get a higher return, a little bit more delayed. They put some into existing, buy and holds where there's already cash flow in place. So I think actually I would prefer that if, that's what we do. We have a rental portfolio, and we do these development jobs. So I think that's a good diversification within the real estate industry.
Yeah, there's certainly no wrong way, right? It's whatever profile meets your criteria to want to invest with somebody. I had seen before people who do a different deal than they used to normally do or typically do, right? Where it's like if they never done development before, it was their first development deal. They had trouble raising for their first development deal, or vice versa. If they only had done development, they can't raise for the regular syndication model because their development investors are used to getting those big pops like you guys try to look for, right? So yeah, I was just curious, but it sounds like you guys are still maintaining pretty much consistently. I guess it is kind of deferred, if you will, kind of deferred gains, but a bigger profile or return at the end there. So yeah, I just wanted to kind of hear your guys' takes on that. But yeah, as far as this deal or ones you're still looking at, what do you think are some of the more interesting hurdles that you don't typically find in the space? I mean, these are, I would argue, obviously more creatively done than your typical kind of buy and hold asset and do a little value add and kind of walk away from it. So, what are some of the hurdles that, I guess maybe just thinking about this deal specifically, going through it, you learned some lessons. You talked about some of the credits you can get, kind of getting the backing of the community behind you. Is there some more focus that you'll be driving towards some of these channels moving forward to get more of these types of deals done, or where do you see kind of more value out of these types of deals?
Yeah, it is something we want to start doing more of. And I would say, kind of to your first part of the question, the difference between, maybe a more, typical kind of, I know there's no such thing as typical, every deal's
No
its own
such thing.
animal for sure. But sort of like a more, I'm using air signs, typical, buy and hold, or maybe a value add. It's really like an extreme value add doing something like this. And then, the condo plays are almost like an extreme version of a flip, Um, and so I think it, if we're talking, I know you're asking about this, but I almost think there's more we can talk about in terms of hurdles, to answer part of your question with the condos, because there's so much you have to go through to get to the point of actually putting a shovel in the ground. It seems like, with the office conversion in this new city we're working, it's sort of catered for that, where they want you to come in. They're kind of ushering you along as long as you're, working with them. They're very friendly. They're nice to you so far. They appreciate what you're trying to do for the city. It's still a lot of legwork. You got to design, you got to like kind of create out of nothing and envision how this will look. But flip back again here, I'm going back and forth to the condos. There's so many roadblocks that you wouldn't think you might see. Okay, Boston has sort of all these boroughs or neighborhoods, not like the boroughs in New York, but much smaller, but different kind of sections of Boston. And there's one area called East Boston, and we do a lot of projects there, condo projects. And you'll see sometimes a really old, dilapidated building. Maybe it's a 2-family or 3-family. That's the majority of your housing over there right now. The housing stock in East Boston is smaller multifamilies. So we'll see an opportunity, and we've done this before, where the parcel of land is pretty good size. Maybe it's like a little bigger than the average one you'll see on that street, but none of these are huge. We're talking, when we say good size, we're talking maybe 6,000 square feet, 6,500. So we find something where we can we can knock it down. Our architect can kind of blend in the new design and end up maybe being like 6 or 7 units, but it will kind of look like a triple decker. It'll fit in such a way so it's like it's not just 1 unit per floor. It's kind of inside. If you saw the floor plans, they'd be kind of meshed and move. It's a very interesting thing, but it's not hard to do for him. He can do it, our architect, and we'll kind of present something like that a lot of times to the neighbors. And that's kind of the first step, because again, say it's a 2-family zone, you're only allowed to build 2 units there. So when we go in and say we want to build 7, that's against the zoning code. You can't do that. You're not going to get your building permit. To get your building permit, you need variances on all the specific zoning violations that you'd incur. So if you're building 7 units instead of 2, it's, number of units violation. If you're, 5 feet from the street, you're in front of your building, but you need to be 15, it's, a setback violation. So those are like dimensional violations, height, stories, those type of things. You might need 1 parking space per unit. So if you're doing 7 units, you need to somehow figure out how to find 7 parking spaces on that parcel. So, you have there's so many steps to finally getting that permit issued. You got to meet with neighbors, you got to get support. You got to meet with neighborhood groups. The mayor's office then sends a representative to see how these meetings are going and try to sort of mediate. Then, you move on to kind of civic groups, which are a little wider versions of these sort of local neighborhood. You talk with the local politicians, try to get their support, but, of course, they want the neighbors are the majority of their, voters. They don't really care about one developer. So they're pretty wishy-washy depending on what helps them the most. And most of the time, the neighbors don't want you to do anything. You go in with, hey, I'm going to do 9 units here. They say, this is a 2-family zone. You're only doing 2. So right away, it's a hostile situation. They hear you might sell a unit for $500,000 in the end to a new homeowner. They think you're putting a $500,000 check every unit in your pocket, and they get pissed about that, but it's not the reality of it. It costs you to do it. Most of that money. So there's all these kind of barriers you have to go through. just to get to the point where you're then in front of the zoning board of appeals to make your case and say, look, we've been working with the neighbors for 12 months now. We worked with these two civic groups. We have this guy supporting us, this guy. We got all these letters of support. You got to go around, try to get people to support you. And the problem is, or challenge, I should say, that we usually have to get around is most people who show up to these meetings are against you. People who don't care if you're doing something in their neighborhood just don't show up. They say, go ahead, build it. It's fine. Some people have the perspective that this is going to increase my property value. Some have the opposite perspective. So you're fighting all these different challenges, personalities, like political, issues and factors that aren't related to your construction of a new building or providing new housing whatsoever. You might have a dilapidated house that no one lives in, and they're still fighting you when you're going to upgrade the neighborhood, So that's why there's so many hurdles to overcome with that aspect of our business, that particular, sort of niche that we're in with the condo development. Again, to even get to the point where you're in front of the zoning board and you say, okay, your attorney speaks and says, these are all the violations we're incurring. Can we get relief on these? And they'll weigh all the factors. They'll say, okay, you have this many letters of support. You met with these people. They agreed. Looking at the shape of your lot. Okay, it makes sense that you couldn't really do what you want to do. Your building's not outlandish, but you have these 75 neighbors with opposition letters, so then they weigh all this and then they vote and they grant you the variances. And once you get that, in most places, you'd get your permit. Not in Boston. You still have a big sort of uphill battle. That's the biggest hurdle. But to finally get to that building permit, you need a full construction set. You need it approved of drawings, so the actual contractor can go off it. You need, water and sewer plans, so civil plans, mechanical plans, fire plans, and then these all need to be approved by so many departments in the city. And it's a long process till you finally can get your demolition and separately building permit. If you're knocking a house down, you need the demolition permit. So that's very long-winded, but also very short compared to the real process. And that's why I chose that as an example to talk about the hurdles, because so far in our experience, there've been a lot more hurdles developing condos that'll actually, bring residents to own homes and pay taxes in that community than we've seen with the office conversion.
Well, man, I mean, it makes you guys expert deal closers if you got to get through all those, and it sounds like it makes the office conversions a cakewalk, right? So, there's some benefit to that pain, I guess, if you will. Yeah, really, really interesting to hear that. Yeah, I guess when there's more buy-in, like we talked about these secondary, tertiary submarkets in Boston, there's a lot more want or need for you guys to come in and add some, quality space to, the city or the town. On the flip side, the development probably more hard at Boston, right? So a lot more red tape, literally legally, and of course from the people nearby. Do you have to kind of just throw in the towel at some of those deals that just there's too many things going against you, whether it's the local neighbors or anything like that, or do you find a way to get around the stubbornness and weave through the deal?
We've never thrown in the towel per se, but it's not, we could, we'll have certain deals where we have what's called a zoning contingency, and we don't actually close on the property until we already have full approvals. In a situation where we sense that this is just not going to happen, or it's going to be a ton of revisions, going to be very expensive to keep, doing plans, we would have backed out, but we actually haven't had that happen to us. We have been in deals where we were denied at zoning because of, too much opposition. And we do have a good team. We have a really good zoning attorney. We always get support from a decent chunk of, neighbors through letters of support or whatnot. But as Eric said, the people who show up to these zoning hearings and these meetings, they're driven by, feelings of wanting to stop this. The people who are positive or neutral, they don't show up. So that we have had projects where we got denied, but in those projects, we had a backup plan. So, and our investors would know that from the beginning, where we'd say, if we get approved for, 6 units or 7 units, maybe your return will be higher. It's different from deal to deal. But in those cases where we didn't have a zoning contingency, we already owned the land and we got denied, we knew that we could build 3 units there, pay our investors back, make a little bit of profit, maybe not the amount we would want, but it's not going to be a bad deal. So we actually have deals like that going on right now. Typically what we do in those sort of deals, we would be building a multifamily condo building, but now we're getting knocked down. So we build kind of bigger townhouses instead, because there's also a lot of demand for units like that. And then we'll sell those individual units for, the highest price that we could get in those markets.
Yeah, it doesn't matter what deal you're getting into if you can underwrite the the safest assumption on an exit, whatever that business plan is. Go for that one, and then the upside is obviously more fun when you get to that one. Um, but
Exactly.
but yeah, Nick and Eric, I'd love to, I know we're slowly running out of time here, but I'd love to get to these 5 key questions. Not sure who wants to start, but the first one here is, if you could only pick one trait that explains your success, what is that trait and why?
I'll start. I mean, I almost feel like this could kind of, well, I won't speak for Nick because I have an idea what his might be, but I would say, willingness to, sort of like, I don't know if this is a trait, but willingness to listen and observe others and sort of, lose the ego. I think going into it, I won't make this super long answer, but I think going into it, running our own business when we're young and are, just kind of working backwards. Not that we are know-it-alls, but I don't think we realize the, the need to do that. And so I think having like self-awareness and saying, look, how do you know if you're, in your late 20s starting a business, and this guy who's 55 who has all these assets is telling you that's probably not the best approach, try this. How you just factually, he knows more than you about it. You gotta, once you kind of accept that, and really look to other people for advice and see what they're doing and take that all in and just realize this is all about the end goal of, accumulating assets, building housing for people, and securing, financial freedom for your family. And don't let any personal kind of ego or thoughts like that get into it. You really, I mean, sky's the limit. You can learn whatever you want, really.
Yeah, I don't know. Nick, did you want to take a turn, or you guys want to alternate? It's totally up to you guys.
I think we'll alternate because, one of the reasons we're good partners is pretty aligned on this sort of
Similar
stuff.
mindsets. I like that. I like that. So this one's for you then, Nick. What is the most uncharacteristic thing you have done in your business, and why did you do it?
um, I guess it would be overpaying for deals. People would say never overpay, right? You're always looking for value. But in that case of the zoning contingency I mentioned earlier, what we do is we go off market and we go to these homeowners that are in really favorable zones for developing, apartment buildings or multifamily buildings. We know from the beginning we can do a good project there. So we say to them, if you let us wait, you're not even looking to sell your home, right? So if you sell it to us in a year or two, we go through this process, get it approved, we'll pay more than the market value. So that's a very rare thing that I think in real estate you typically don't want to do, but in this specific circumstance, it's actually done pretty well. We've been able to get some good projects out of that.
Yeah, and I think the takeaway, overpaying to me would be paying more, which basically ends up in your investors getting less of a return than the risk they're putting their dollars in. So if you have that kind of opportunity that you can squeeze out that no one else is seeing, you're still giving a good risk reward profile to your investors. I think that's, you probably paid fair price or even below. So it might have been conventional, the listing market price was overpaying, but um, that's what the value add is, right? So yeah, I really appreciate that. And then Eric, can you name a time where you felt like you were not going to end up successful, and how did you overcome that fear?
Yeah, you know what? It wasn't too long ago, actually. So really, going back probably about 6 months ago, our biggest deal now, that we have is we own it outright. It's a 32 unit condo development. Construction is just started pretty much like this last week. Um, and the sort of thing with that where we thought we're not going to be successful in this, that thought was creeping into both our minds at one point was, really back in the spring, we got this thing under agreement like late winter, early spring 2020. It was a permitted deal. So that's a thing some developers do in Boston. They go through that whole difficult entitlement process, then sell it with the permit. So we didn't have to go through the neighborhood process. We bought it already, just about ready to go. And we've done that too ourselves. And as long as there's meat on the bone for both parties, you can make a deal happen sometimes. So we've now taken it over. We're developing it. And it was our biggest jump up in size of project, units, value, everything. Even from a like price per square foot perspective, really every metric you can think of was the highest we've dealt with. And so right away, lenders and equity groups we started going to, that's all they could point out was you guys have, done the biggest you've done is like a 10 unit building before this. And this is 32, sorry, and we're thinking, how the hell are we going to bridge this gap? How do you do that? Then do we have to do 11 units, then 12? And just, you know what I mean? How do we do this? But we said, no, we're not going to listen to anyone. We kept like pounding and finding people that would help us raise money and just kept talking to different lenders, tons of private lenders. And eventually after months and months and months, we found the right source. We're able to then raise some capital for it. And we ended up, making it work. And it was sort of a point where we said, I don't see how we're going to run out of date. We have certain dates and contingencies as part of our offer that the seller agreed to. We're just going to run out of time. The market's gone up. He's going to sell this thing to someone else for way more. We got to figure it out. And so we did. Yeah, it was basically just relentless, nonstop. That was probably, I feel like the hardest we've both probably worked at anything was this, getting this deal together.
Yeah, and it's funny because that kind of goes back to the first question, but a frequent answer I get for the one trait question is kind of just that stubbornness or the tenacity or the keep goingness, and that's basically what that was, right? It's like, screw this,
Yeah.
I will figure out a way to get this done, whatever it takes, dial, find the right partners. So yeah, that's awesome. And then Eric, the flip one is to you, pretty much, exact opposite. Can you name something where your business went perfectly and what did you do to make that a reality?
Yeah, I would say one of our earlier deals, it was a two-family. We wanted to go in and build, 7 to 9 units. Very quickly, we got approved. We had a good zoning attorney. She actually retired. So we got a new one, but he's also good. She was really good, got through the process really quickly. Bought this property for, a steal on MLS of all places, which usually, we have to get it off market nowadays. And sold all the units, pre-sold them, every unit other than one before we were even finished with construction. Probably like 5x multiple on our money on that deal. Pretty much all the stars aligned. Very good
Wow.
project.
Yeah, that's 5x is pretty impressive, even on development or redevelopment, whatever that is. That's pretty darn good. So good for you guys. And the last one here, fellas, what have you been focusing on lately to improve yourself or your business?
I think, just kind of focusing on bringing in experts, if you will. So it's like, we don't have a ton of people that work within our company per se, a handful of people, but we've started to realize, look, we're looking at like this tax credit thing, for example, with the office conversion. We have no idea when we did it. We've learned a lot more in the last few months, but we had no idea what we were even talking about discussing these things at first. So we kind of, we started to realize I don't want to say start to realize, we've been doing this for a few years now. You have to really let the experts handle it. So like the architect comes up with a design, just you can tweak it and point out stuff, but trust him. That's what you're paying him to do. Your zoning attorney, you might think something logical to say to the zoning board, but what about this? Nope, they're basing it on, code and laws. So let your attorney handle that. The tax credit consultant. No, but this guy got this deal down the street. Why couldn't we? He says, trust me, guys, I've been doing this for 20 years. I know how the tax credit approval process works, so when you kind of get to that point, it almost allows you to really expand and grow your business and almost buy more time for yourself and your family, even outside work, because you're not spending all this time like crunching numbers and doing stuff that you don't even understand what you're doing. Not that we don't crunch numbers all the time, of course, but it's certain aspects of it. You got to just give up the power, and not recklessly. We understand it to the best of our ability. And then we say, okay, you know way more what you're doing. You're going to get us a much better result, get our investors a much better payout when it's done. You handle this part of the business. I think that's a big thing we've focused on more and more. And sort of, I guess a one word answer could have been kind of offloading,
No, that's great. And it can be tough because at the start of anything, you kind of have to wear a lot of hats.
You
Luckily,
do.
you have a good partner where you can at least split it up in two, but eventually as you get going, those hats got to be divided up even further, and you got to trust who you're giving them to.
Yep.
And you don't want to wear them all anyways. You want to just stay in your lane and do the things you're best at, and that's going to grow you faster anyways. But yeah, it's the goal is to do that as fast as possible. Pretty much, it's so much easier to say that in 30 seconds like I did than to
I
actually
know.
do it in
I
real
know.
life. So, but yeah, gentlemen, really appreciate the time today. In case a listener does want to reach out to you to get in, talk about investing or what you guys are up to, how can they reach you guys?
Yeah, Eric and I are both on LinkedIn under our names, Nick Earls, Eric DiNicola. We have an active Instagram account. We post, project updates and stuff like that. That's Winter Spring Capital on Instagram. And then our website, winterspringcapital.com. Got a whole bunch of articles on there, pretty much all the stuff we've learned over our careers. We've put into free educational content. We've got a couple ebooks on there about condo development, passive investing. So definitely check that out.
Nick, Eric, really appreciate the time. I like when I can get a couple of smart guys on that get my gears turning. I got a couple of things going in the back of my brain now, so appreciate that personally. Hopefully, a listener got something out as well. I'm sure they did. Yeah, just appreciate it once more, guys. Thanks for your time.
Thanks,
Thank
Dave.
you.
Thank you for listening to the show. I don't take your time and attention for granted and appreciate that you would spend it with me. If you enjoyed this show or any of my previous shows, it would be a huge help if you would rate and review the show on Apple Podcasts or your favorite podcasting service, or even just share the episode with a friend. And if you'd like help from me or would like to talk about real estate investing further, feel free to visit the show notes for more information, or you can visit davidtravis.com.